If you want to make passive income every single week, you need to invest into ETF stocks that are going to pay you in dividend. And if you line them up strategically, you could get paid almost every single week. Hi, I'm Ace, and I built a 400k plus portfolio in just under 5 years in my early 20s by using Buffett's value principles, my bachelor's degree in finance and investment, and the real estate cycle. And I do believe that income is powerful, but what really matters is total returns. Dividends are nice, but only if the business behind them is strong. First, we've got Global X Super Dividend ETF, or SDIV. Now, this one focuses on high yielding companies all over the world. The dividend yield is quite massive, around 10%, but the catch is, it is riskier because many of the companies inside are smaller or struggling. Its 1-year annualized return is 13.27%, 5-year is 2.78%, and 10-year is minus 1.78%. But if your goal is income, this ETF does deliver checks monthly consistently. Second is Invesco S&P 500 High Dividend Low Volatility ETF, or SPHD. This one is the safer ones. It invests in 50 companies from the S&P 500 that not only pay strong dividends, but are also less volatile. You're looking at a yield of around 3.45% with much more stability. Its 1-year annualized return is 3.43%, 5-year is 12.08%, and 10-year is minus 8.94%. The third ETF is Global X Super Dividend US ETF, or DIV. This one has a similar idea to SDIV, but it only targets US companies. The yield is about 7.5% and payouts are monthly. Its 1-year annualized return is 8.26%, and 5-year is 10%, and 10-year is 2.75%. If you pair DIV with SPHD and SDIV, you can literally stagger the payout to land almost every single week. Now, here's the important part. Dividends aren't free money. The stock price usually drops the day they pay out because the value of dividends come out of the company. And in both the US and Australia, dividends are taxed differently than capital gains. In the US, you often pay ordinary income tax. In Australia, you may get franking credits, but it still adds complexity. That's why I'm not prioritizing dividends per se. I care about overall returns, how much I make in total, not just in fixed payments. I stick mostly to value stocks with strong fundamentals because they tend to survive and rebound in tough times and across cycles. That's why for me, dividends are nice, but they're not the whole strategy. I like using them for income and stacking up cash, but I combine it with value investing in the real estate cycle. Because when the market actually resets, and right now it seems like it's not that far away, even dividend payers and dividend stocks will take a big hit.